Hello, everybody. I hope you guys are doing well, having a great day or a great night. And before I jump into the charts, let me tell you guys how it is going to happen this year, this season. So this is the fourth time I'm covering the harvest season, which is 3 months. It started in 2019. I shared on Twitter. And since then, I'm sharing on YouTube recording videos. And so far, we've been accurate, okay? This video is not about technical analysis, but technical fundamentals, okay? The thing that is going to move to make happen what we can see in order to make analysis, it's the fundamentals, okay? So first, the fundamentals, and then making sense about all of it using technical analysis. The other way, it's not going to happen, okay? Not going to work. So I'm not going to share my opinion. I'm going to talk about facts, the things that are happening, the outcomes, the result of those things. And so when I'm going to say something about which is my opinion, I will say this is my opinion. Okay, all the other things I'm just reading and describing better and easy way so you guys can have a better understanding, because it's a lot of things. It can be overwhelming. So I try to put all of this in an easy way, okay? In a way that even people who have almost no understanding about those things can put them together. So let's start. So this is the CPI report, the Consumer Price Index. We should have an update today, but it seems they moved to October 13. Okay. The only change since August is plus 0.1% adding to inflation. I think, so this is my opinion, they moved to October because it will be close to elections. And then in a few moments, you guys will understand why. Just a second. Okay, so this is the oil reserves the United States have. It's going down and down and down. So why it's going down? So the Democrats, they are removing oil from the reserves and adding into the, let's say, the market. So what happens? In the short term, the price of fuel, gasoline, goes down. Okay, one of the reasons this is happening is they are cheating. Why? A high price of gasoline make voters unhappy, especially the ones who, I believe the word is swing voters, okay? So these people go unhappy, they're not going to vote for Democrats. So what Biden and the Democrats are doing, they are picking the oil reserves, putting to the market to decrease price till November. Because right after November, they will have to buy, if I'm not wrong about the number, I don't record well, but if I'm not wrong, it's 60 million barrels the United States will buy. This will push demand, and then the price of oil will go up again, and so the price of gas right after. So this is a fact, unless something about this changes. And right after they get these votes, their hope, they will just they will go nuts because they don't need the votes. They don't have to care about anything at all. So this we are aware for quite some time. So there is no change about this at all. And we still have September, October, and then the reserves will keep going down before going up again. So demand, price, and reserves itself. And this, folks, it's aligned with the scenario we've been talking about, that inflation will be persistent, okay? And also, there is another reason for this to be happening. If I'm not wrong, it's here. So this is the current interest rates, 2.5%. And so this is one fact. The other fact is, in order to properly fight inflation, these numbers should be at 1 or 2 points above inflation. So inflation today is around 83, 85%. So interest rates should be at 9 and 5 or 10 and 5. So similar with what Paul Volcker did back in the day to really fight inflation. But the problem is, if they fight inflation, they destroy the federal government, and right after the global economy. Yes. So before jumping to that number, let's take a look at this one right here. So this is the GBP. So we had a -1, then another -1, which is a technical recession. So this is a fact, okay? But the Democrats are cheating again, trying to make this, oh, it is not because we need 3, 4, it's not how it works. They even changed it on Wikipedia. They are trying to change the definition about this, which is a way of cheating. When we put all the numbers together, like I did with the tool that I developed, so this is a small adjustment, a small update, but it's still a recession, okay? So here we go. So what I believe is that the inflation number, so this is my opinion, based on all this evidence that we have. Of course, we must wait for the numbers to talk for themselves, but we can form an opinion. They are trying to ease the curve before the elections to match their narrative, and right after, things go crazy, go nuts, and it is probably going to be chaotic. So the next numbers we will have on September 29. The Federal Reserve meeting is on 21, 22, if I'm not wrong, right on the beginning of the harvest season. And let me see, there is other one. Oops. Okay, so the US debt clock. All people know this or saw this one time or two, or not aware of this. But one thing that almost nobody was talking about, I shared this on Twitter, is that the US federal GBP debt, US federal debt to GDP ratio, as you guys can see here, it's right now at a staggering 124.45%. According to the World Bank and also the IMF, the threshold is at 77%, which means it's close to the double. And folks, this is the doomsday clock for the United States and also for the global economy. So one way it is going to happen. The question is when. All the things that they are talking about and the way they are trying to fix the narratives is just a little tweak, trying to make this thing survive for longer, you know? Oh, a small tweak here, oh, we can buy 6 months. Oh, another one plus other 3 months, other 4. And every time they do this, they make things worse because the monster is growing bigger and bigger, and it's going out of control. Okay, so the increments on the interest rates can't fight inflation at all. At all. It's like this. Imagine you have 1,000 soldiers storming your country, and you keep sending baths of 100 soldiers. Okay, so 100 against 1,000, 100, 100, 100, 100. You send, let's say, 1,000 soldiers, but in 10 10 different squadrons with 100 each. So the 1000 is going to obliterate all those soldiers and keep going, you know, because the what is the word in English? It's attrition. I believe this is the word. It's very small to make a big impact to make such a force to stop. Okay, the example are here on the numbers. The Fed increments, for example, 0.25 against 9%, 0.75 against 85%, another 75. You see, it's not going to change because we need a big impact. Okay, so it's quite similar with military strategy. You see a weak point, you blast, and then you spread, you know, open different directions to fight that force. So this is almost exactly the same thing that is happening right here. And there is no way to stop this debt to GDP ratio. It's almost impossible. Why? The state grows too big, and it consumes a lot of resources. And this, folks, it's also proof of something that we've been talking about before the presidential elections, that the Democrats would make the state bigger and bigger and bigger, and the debt would grow bigger and bigger and bigger and bigger. Of course, it's not only their fault, okay? We must be fair. But they went nuts. They went all in, okay? Let's see what else I saved here. Dow Jones. I shared this chart on Twitter with more details a few weeks ago. And if you guys can check it out. I haven't changed this bar for this event right here. So we have the US election, and I wrote this hidden event to take place right after the US election. And it seems we are in the right path where the Democrats will go nuts and things will turn into full chaotic, you know, is going to be awful. What else? So about the inflation bill, the Democrats passed, the impact of the whole thing will be 0.1%. That's it. It's useless, it's not productive, it's not able to stop inflation. We will only make it worse, okay? The Chinese economy collapse. It turns out that it was the biggest Ponzi scheme in the human history, the way it happened, okay? So some people are saying it is going to collapse in the coming days. So this is my opinion. I am not sure about this. I'm still trying to make sense about the numbers, but things there are very, very bad, okay? Bank runs, people not being able to use their credit cards, their debit cards. They can only withdraw 1,000 renminbis per day. This is nonsense. And probably the most important thing, when they notice the state was protecting the companies that scammed them, they decided to go into the blacklist. So what is this? They decided to stop paying their mortgages, okay? And the banks started to collapse. So it's a domino effect. And I don't know how it is possible to reverse all of this. I don't think it is possible, not right now, and especially one of the consequences about all these things that we are talking about is that stocks go down, you'll be hurt, the dollar keeps going up, the yield keeps going up, till the day where the Fed will change their policy again. Okay, so now let's take a look into the chart for a quick example. July, where is July? January, April, July. Let's draw a bar here. July. It's the QE plus interest rates at 0%. So, not long ago, how the magic happened. The Federal Reserve lowered to zero interest rates, nothing new. The quantitative easing was when the printer went crazy again, printing excess of supply or money supply. We must be fair always, okay? So here's the thing. If they haven't did this, the crash would be way, way worse. So we could have a early recession, or let's say not at the same time, because we didn't have inflation like we had, let's say, 1 year, 6 months ago. It's scaling, right? But so that was the beginning. And so they started to print a lot of money, cheap money. All this money going into startups, the stock markets, unproductive companies and businesses. Even woke companies started to go crazy on cheap money, making products that aren't profitable. Okay, so it was just, oh, okay, everything's fine, everything's great, the economy recovered, let's go to the moon, that's it, and I'll stop. And that's the problem. So from July, so this is what the Fed did, and now we are going to see what they said they are going to do. They may change in the future, yes, just like they did in the past, but let's stick to the facts. So now they said they will take from the market $1 trillion in the space of 2 years. So let's go late 2024. September 2024. Yes, right here. So here we have the beginning of quantitative tightening. That's when they start to remove the money from the market. Beginning or they start. Quantitative tightening start. Quantitative tightening end. So this is what they said. And actually it's happening already, but at a smaller pace, but it is starting to get thin, just like Jeremy Powell said would happen. So let's keep drawing the facts here, then we try to make sense and talk more about it. Oh, it's right here. 60 weekly. Yes. Okay. So as we understand, these two guys, they don't move in the same direction. They are antagonists, okay? One is against the other. I explained this in the previous videos, especially on alt seasons roadmap. I shared a lot of details there. But the previous target that I shared for the dollar index 2 years ago, and people said I was crazy, it's around 112, 114, if I'm not wrong. So let's go 14. Okay. Now, let's talk about possible scenarios here. If they go for 2 years, it can be a recession. Yes, a recession. But it's not going to change the trend. In order to have a change in the trend for a bull to a bear, we will need years to have a properly validation, confirmation. But I don't believe it is not, I strongly believe it is not going to happen. So if, let's say, if this number makes a higher low, things are okay. Because I believe, this is my opinion, not a fact, I believe we end up with a higher low, whatever is the landing spot. If somehow we goes below, down below the previous pivot, it's more pain, but doesn't make a bearish trend, okay? Again, we will only have a possible confirmation in the near future. So let me draw another arrow here. One for a breach and one for a higher low. So the same thing is true for the dollar. The first one is the higher low inverted, and then the breach. Right here. So the higher low, Feb 2021, just a second, folks. So let's go from here. This would be the higher low. And this would be a breach. Yes. So talking about the dollar trend, I already explained this in the 1 or 2 videos a few months ago. Nothing changing, nothing at all. So the dollar itself is still in a bearish trend. The stock markets are still in a bullish trend. I don't believe, and there is no technical evidence to say that the dollar is going into a bull market. This is almost impossible. Okay, almost it's the chances will be 0.0001%. Okay, so it's not even does not even make sense to take this scenario into consideration. Yeah, so let me see what else here. Just a moment. Yes, I think I'm not missing anything. How strong will be the next implements or increments in interest rates? We don't know. There is no way to know this. If it is going to be 1, 1.25 or 1.50, we don't know. But we do know it will keep going up. And until it keeps going up, the stock markets will keep suffering from it. Not only the stock market, precious metals, cryptocurrencies as well. And yes, so one thing about cryptocurrencies, XRP is the only jack of all traders. XRP is the only one that will break free from the crypto market into the near future. So the catalyst will be the lawsuit, the trial to be over, to end, and then things will start to change probably with regulations, okay, because XRP will start to go up, may push some of the others like Songbird, Flare, a few others that I already talked about. And so, Yeah. So now let's take a look into just a moment. Following all these things that we've been talking about here so far, the euro will take a big hit. The British pound will take a, I'm not sure if a bigger hit or similar, but it's going to be a big pain. The Australian dollar, Turkish lira, who else? Well, many others, okay? The Korean currency, the Hong Kong dollar, many others. The whole majority will take a big hit against the dollar, okay? Um, so let's take a look on gold. IDC. So, not long ago I made a video about gold and nothing changed since that video. And this is also one of the reasons why I don't keep recording, refreshing or recycling videos, you know. I'm not looking for views or I'm not doing this for amusement. If there is something new, something break or something different, then I record a video. So it's a bullish trend, nothing changed so far. There is also no reason to believe that we are going to have a break here. It is possible, yes, but I don't see how it can happen. And the previous target I shared for gold was, I don't even remember, folks, but was most likely higher low. Okay. Also, it will be related to the dollar, interest rates, and the stocks, the scenario we're talking about, a higher low or a breach. So it's something to take into consideration, okay? So again, it is not going to be driven by patterns. Patterns will be driven by external events fundamentals. This is the thing to look at right now, okay? So yeah, so at this moment, uh, looking for a higher low. That's uh, it's not something that I want, okay? It's something that I'm expecting based on the things we have so far. And again, I don't believe the Federal Reserve will keep going with it for 2 years, okay? Uh, we already have some news that they are planning to start to easy on rates around June next year, okay? So they say 2 years and go for 6, 9 months. It's a possible scenario. So now let's take a look into Bitcoin. Silver, it's almost in the same boat as gold, but there is more weakness. Okay, so gold going down, silver will go down as well. People are excited because gold went, actually silver went close to $20. But it's a dead rally or dead cat bounce, like some people say. And there is another thing, folks. Some people like to invest in precious metals. Okay, that's their choice. But the return over investment, it's one of the worst out there. Okay, so is this really a great choice of investment? Because stock markets performed better, crypto performed better, uh, other kinds of investments had also better returns as well. So imagine we are talking about 1x in, let's say, 2 or 3 years. there is risk for a poor reward, so that's why I don't invest in precious metals, okay? Um, yeah. I mean, I also don't want to be exposed for a long time in a asset which I'm going to have marginal gains, doesn't make sense for me. So Bitcoin. Let's add the data that we are aware of. Uh, so Bitcoin follows Dow Jones. The crypto market follows Dow Jones. Doesn't follow Nasdaq, okay? Because Nasdaq follow Dow Jones as well. This is a myth. And let's add all that data that we are aware, and let's try to make sense about such a scenario. We must start from July, when the quantitative tightening began, right here. We go into 2 years, that's what the Fed said. July, oops, 23. So the month is right, the years is right. Now, just a second. Quantitative tightening, start. The end. And in between, what do we have in between those two bars? Let's go from here. Hmm. Will it work? Inside, yes. 20. Center. Great. So this is the expectation to fight inflation across 2 years. Okay, that's what they said. But I think it happens a bit before. I think this. So this is my opinion. And okay, so now let's go. So the Federal Reserve is removing money from the market from here all the way to July 20. No, it's 2024. What I'm doing. I knew it was wrong. Something was wrong. So forgive me, folks. I knew it was too close. Something was wrong. Okay, so this is the expectation to properly fight inflation. Okay, so this time frame, it's makes sense to have a change on the trend. No, I don't think so. This is my opinion based on the technical fundamentals that we are aware of. But it is possible for a dark future for some coins and tokens. Why this? A few days ago, like 2 days ago, I recorded a private update for the Champions Club where I was discussing a possible different scenario. But so trying to look into fundamentals, how things happen, possibilities or probabilities, maybe how was based on speculation and opinion. Okay. And to be honest, I wasn't aware of the quantitative tightening and the United States dropping the oil reserve. Okay, I wasn't aware of that. I was aware only of half the information. So one of the scenarios that we discussed, one off, that is possible to happen is, and then we try to make sense about this time frame that we have for 2 years of a possible recession, possible, because there is no way to fight inflation right now in the way they are trying to do without harming the economy. Okay, we knew this for a long period of time that things were not fine, the economy wasn't great, the numbers weren't looking good, and so on. So let's say, just for the sake of this example, that so by a matter of fact, we know the crypto market is going down, will take a big hit in the next 1 or 2 weeks, most likely not, probably not by October, but a bit before, a big hit. So can be 50% where we are right now, yes. And it seems it will be bigger than that in the 2 or 3 moves, which I was expecting the next one to be the last, but I think it won't be the last. This is my opinion, not a fact. So the previous target, it's not based on support and resistance. There is a math behind it. I shared part of it. Was around $12,000. But I think for the coming future, it can be as low as $7,000. Again, can be, and all of this is based on the Federal Reserve is doing, what they said they will keep doing, and so the part of this analysis, it's not my opinion at all, okay? Because this is exactly what is going to happen with the stock markets, okay? Of course, at some point, we will see some rallies because nothing goes down forever and nothing goes up forever, okay? So this is a fact. So if this is true, or if something worse than this happens, worse, I will use a red line for this one. Okay, so also another thing, the video that I recorded for Bitcoin on a possible scenario, and I said I made it clear that was a speculation for bullish continuation, a possible scenario where we keep going before going down. So that I wasn't aware the Fed was already into quantitative tightening, okay? So still, was just a speculation. As you guys know, I'm not the moon, the opium guy, don't want to make people happy by telling lies. That's not what I want to do, what I'm doing. So if this scenario right here, so this one will be awful, completely awful. And this one right here, if that happens, will tell us a lot about the future of the crypto market. Okay, and then we will have a much better understanding about trends in this near future. Now let's say it ends in half. I mean, it don't go for 2 years. Please remember this arrow right here, it's for time. Okay, it's about time. The start of quantitative tightening and the end of quantitative tightening. So let's say it stops and they properly fight, stop inflation um, in the coming months. Okay. So we have the harvest season, we have the spring. Oh, sorry, folks, sorry. Um, because I am in the other side of the world, so it's inverted for me. So now we have the harvest, then winter for you guys. Yes. So we are talking about 3 seasons: the autumn, winter, and spring, right? So it's 9 months. Remember that we just talking about 9 months. If it is enough to fight inflation, who knows? Maybe can be. Uh, this event, I just draw the line here, whatever the number is going to be. And to be honest, I'm not concerned about Bitcoin. All that matters right now is when the XRP lawsuit will end. That's the thing that matters most right now. That's the only thing. Okay, so right after all those events, one thing that is going to happen is the Fed pivot. Just like it happened on March 2020 after the crash, we went straight down. The Fed pivot based on their new policy, zero interest rates, easy money, cheap money, bang, 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 and then we went straight up. So the continuation or this next strong move can happen on when will happen on when the Fed said, you know, this it's enough. We did the job, etc., so on and on and on. Okay, and yeah, so trying to nail targets, trying to call bottoms, reversals won't happen. Won't help at all. It's insignificant. We only create more confusion, more chaos. So again, we look into fundamentals, external fundamentals, technical fundamentals, and then we put all those things together and look using technical analysis tools. Okay, we like to be ahead, we want to have control, uh, but we can have all of it for the two scenarios: going down and then to go up. It's almost impossible, but that's the approach of technical analysis, trying to make sense based on all the information that we have at hand. Now let's take a quick look into, just a second, XRP. Just a quick look because I said I would only record the next video when we find the bottom. Oh, just a second. Okay, so based on all of this that we talked about, XRP is the only jack of all traders that can break free from the Federal Reserve moves or consequence, outcome, okay? And I believe there is another downside here. We talked about this already. It's inevitable. The question is how much? 21, 24, 25? I don't know. I'm not sure. And let's draw the events right here that matters most, which is XRP external events. The trial can be over by November and March. The interesting thing about this here is that the 9 months period that we just talked about, it ends close to February. It's interesting, okay? Not saying there is something, you know, not a conspiracy theory, just something interesting, because can be when the Fed stop to decrease uh, their approach, their aggressiveness. So if it is going to end by the end of the year, that is going to be great. If it is going to end only on March, then we have to observe, because again, we have 3 seasons: autumn, winter, and spring. They said the parties are bringing their cards. So it's there's a lot going on. It's crazy. So just a second, folks. Just a moment, please. 1 second. Yes. So my view, my opinion, and my analysis about XRP, nothing changed. Zero. Nothing whatsoever. Nothing. Nothing, nothing, nothing. So the only question right now is to figure out where price will be by, let's say, October, November, because it's very, very, very likely that we end up with a higher low, like we just talked about. But even, let's say, a worst case scenario, something, what's going on? It's the end of the days. Even if something bad happens, something that is not expected, will trigger something that is not expected also in the other way. So, for example, we've been talking about maybe 25, 24, maybe 21, whatever. 21. So if we end up with a more aggressive scenario, let's say 14, let's say just for the sake of this example, 14, people will be desolated. And a lot of people will give up, because we are also talking about the crypto purge. Useless, scammy, trash digital assets will burn. Scammy exchanges, the gang group of exchanges will probably be hurt big time. Fake fiat currencies, Tether, BUSD, all these ones will probably have a very hard time, very hard. And so it's a purge from basically all the sides, okay? There will be a lot of problems. But so, let's say, let's go from this pivot right here and all the way down. Let's say all the way down. So this is a worst case scenario. I'm not saying this is going to happen, okay? Let's use 2 arrows because, you know. Okay. Right after, we end up with the trial. The trial is over. Then XRP will lead the way, or pave the way also. Then we go up. So that same scenario we already talked about won't change at all, okay? And so just another example, whatever happens to XRP price in the short time frame won't change the targets at all. The targets will be hit no matter what, okay? It's It's like unstoppable. Will happen no matter what. That's it. Okay. Uh, I talked about and shared about the divergences. We know we have bullish divergences, but again, the bullish divergences will build up against external events that are not even related but impact the crypto market. Okay, so folks, there is a lot going on, many more things to come way very soon, and I'm waiting on cash. Okay, uh, I have all the firepower just waiting to make my move. Uh, when the Fed says, oh, so this is not for XRP. Again, XRP is in a different train. Okay, will be impacted, yes, but on both ways. So here's the thing: when the Fed says, okay, this is enough, we have a new policy. Now we are going to easy interest rates or facilitate something, or there is a double QE, quantitative easing, uh, so on and on and on. Then we know that will be the trigger for the markets to keep going up again. Some will go for new highs. Others will go for not new, for lower highs. Some will still trading inside uh, weekly and monthly bars, which means bearish continuation. Not long ago, I shared, just a second. I'm doing this because some charts I can show. Okay, this one I can, no problem. So let's go. Soon I will try to record a video only about stocks. It's user, yes. Okay. Um, Previously, I shared something about this on Twitter, saying that in the near future, um, General Electric stocks would be trading around $15. And it will happen no matter what. The question is when. Also, Disney, I made a very bearish call, and it's like most likely will happen no matter what. Okay, so not only the money will leave the markets, but debt keep growing. You see, so it's in both ways. So it's steering debt and countries, uh, companies apart. So this can happen in two steps. I am not 100% sure. There's a lot to be considered right here, but let's just try. I won't go for the. Okay, so let me just take a look at it. Yes, so here it is. $15. Also, it's not here, but it's worst case scenario is 12, 13. Just a second, folks. Well, it's close to 13 and 12. Okay, that's the key numbers here. Adding all the things that we talked about, that we discussed, A moment, please. A moment of your precious time. Hold on. So I will use January 30, 2030 for this example. I have to do a better work into these charts, but just for a quick example, just for a quick one. So we go down. Bang. Actually, we are far, far away. So this is the monthly chart, so it's wild. Okay, I'm not trying to nail anything here, it's just the idea. I don't like to do this kind of a forecast or analysis on monthly charts. So just the idea. We know that in the near future, we will have the reversal of the quantitative tightening, okay? Where will be like the Fed pivot, let's say. And then everything goes up like in a crazy and insane way. Remember, folks, we know there is a major crash coming, like we probably never seen before. And I believe this assessment is right. We never seen before. And will be based on, do you remember the GBP? Let me bring that guy again here. This, in my opinion, it's one or the most important catalyst to destroy, completely destroy the United States economy as we know. A lot of things will change. There won't be cheap money anymore. There won't be debt anymore. There won't be the state bubble anymore because at this point, folks, the worst bubble out there is the federal government bubble. There is nothing worse than that. And we knew it would happen because socialists, communists, progressists, they all love it to make the state bigger. As bigger as the state, the more support they have in exchange of jobs, gifts, money. You know, that's a fact. It's happening for almost 100 years across the whole world. So the United States is just the last victim, you know. So then we will have the Fed pivot and an insane rally, a monster rally. For some companies, it is going to be new highs. For others, I strongly believe there will be um, um, lower highs and inside bars uh, a bearish continuation, let's say. Okay, there are also many other ways to look at this, just for a long-term bearish perspective, based on the outcome of the state bubble, which is going to burst and will be awful. So we know what the outcome will be, no matter what. So this just a little bit below, and we end up with a golden rejection. Let me show you. Told you. Even a bit up, whatever, or even a strong lower high, that's it. So this also probably can be aligned with persistent inflation, etc., etc., etc. And we know things aren't good for Disney, many other companies, many of them, many. Ford, General Motors, even Tesla will have some difficulty in the near future because there is a better green energy option. Toyota is working on it. Yamaha, if I'm not wrong. So the Japanese folks are way, way ahead Tesla. Yes, that's insane. And the things that we can see today are actually that ones that will disrupt technology and the things that we are seeing. Okay, so folks, there's way more things that we can talk about here. It's 1 hour long video already. I know it's complicated, but there is no other way to put all those things together. It's just a lot. Okay, so if possible, watch 20 minutes, then another 20, then another 20, and you will be fine. Okay. um, I want to thank you guys for your support, for your time, and if you enjoyed this video, consider to like, share, subscribe, ring the bell for notifications, share with your friends, with the dog, with the bird, with the fish, with everybody. Maybe this video can help someone out there. That's the purpose of recording these videos, okay? Uh, and yeah, so guys, again, thanks for your time, your support. I hope you guys are well, fine, safe, and let's keep watching for each other, okay? Because the government doesn't care about us at all. We are on our own, okay? So thanks again. I will see you guys soon, and see ya.